Good evening, everyone. Welcome to Closing Comments here on June 25th. Let's dive right into our charts and see what happened in the markets today. Cattle prices continue to consolidate. Our August live cattle here on the board saw prices trading inside our prior day's range. We are seeing all week long good support here right around this 208 to 209 level on top of this rising 50-day moving average, holding price up. We did have a little bit weaker close here today with that close at 208.77, but we are still in a very constructive area. Good support line there at 208 to 209 with this 50-day moving average holding price. We are seeing these lower highs still, but these equal lows are showing the bulls are really working hard to defend this line and showing good consolidation here. Any breaks of this downtrend line could see this market push right back up towards 212. We do need to get that follow through confirmation with bids and a close above 212 to really confirm this next leg higher. But at the moment, we still do anticipate this dip to get bought up and resume this big picture uptrend. One thing to be cautious about throughout the rest of the week is any offers below 208.10. We could see a little bit of a flush there, so just be cautious with any breaks below this 50-day moving average, as we could see a flush below it. But this big picture uptrend still remains intact, and while this support line is still holding, we do expect to see this market get bought back up and see these bulls push this market back towards these all-time highs. Over to the feeders now. Similar action, nice tight range day, hanging inside the prior day's range. We did see a close down here near the lows, but price continues to consolidate, building up pressure here in the low $3 range. Good support down here above the 50-day moving average. We haven't quite reached it here on the feeder market, but still seeing good support here at our key moving averages. We do need to get bids here above some of these prior day highs and get some confirmation above 305 to really get this market rolling again. But at the moment, we still do expect to see this dip get bought up as this big picture uptrend remains intact. We do still expect to see this cattle market begin to rally here before the end of the week, but just taking some time consolidating here at a key support point. So just want to be ready for any breakouts higher and be cautious just here with any breakdowns below this 50-day moving average. We just want to be cautious of any flushes below there. But at the moment, cattle market looks to still be consolidating and building up some support. Look for this uptrend to resume. Head over to the corn market now. We are rolled over into this December contract. Volume is kind of going back and forth here between July and December, but the current front month still remains December. We are breaking down here below this 434 level on December, really driving this market lower down to new contract lows here on this corn market over the last few days. Seeing a nice breakdown all the way from 447 down to 421 at the low today. Nice 26-cent breakdown so far this week since late last week. Corn market just continues to get cheaper. Look for these corn prices to keep drifting lower. We are starting to dip down into oversold, overextended territory, so a little bit of a relief rally could be expected here in the days to come, but this downtrend is rolling and don't expect the bears to let up as we expect corn prices to keep getting cheaper. Crude oil market had a relatively quiet day with price trading in a tight range compared to what we've been seeing over the last couple of weeks. Today's $1.50 range was a lot smaller than what we've seen over the last 2 to 3 weeks here. Price consolidating here right around this 50-day moving average, right in the mid-60s. This 64 to 65 level is a spot that we've been watching for a couple months now, dating back to this tariff day breakdown. This big rally higher was immediately reversed, and we've given everything back since the news about the situation over in Iran was released, reversing all of that upside, and prices hanging steady here in the mid-60s. At the moment, a little bit of a rally from here following this $10 to $13 sell-off we've seen so far this week. Wouldn't be surprised to see a little bit of a snapback rally, but don't expect this crude market to really get moving again. We do expect to see crude prices just kind of settle back into a comfortable area, which this comfortable area in the crude market has been in between the 65 to 70 mark for quite a while now. So wouldn't be surprised to see this crude market just start to get choppy and get pretty directionless. So we maintain neutral bias here until we can let some of these charts sort themselves out and clean up some of this recent volatility. So in the meantime, just expect continued choppy action here in this crude market. Over to the equity space now. Really quiet day across the indexes. Each of our indexes just trading here right in a really tight range at the top end of yesterday's range. New all-time highs on the Nasdaq today as the tech sector is continuing to show its strength and lead this market higher. We have seen a nice breakout here above 43,000 on the Dow, so we're starting to see some of those Dow stocks get a little bit of momentum rolling higher, mainly in the finance sector, finance and banking sector, really seeing some good upside recently. Not much else to say about this equity market at the moment. Just expect to see continued upside here as this low volatility uptrend remains intact. Market remains healthy. We are getting up here a little bit into overextended territory, but with this low volatility grind, I wouldn't expect to see any big shakeouts. Just see this market continue to drift higher as we are inching up here towards these all-time highs on the S&P. Like I said, the Nasdaq did get all-time highs today, and we should see the S&P follow suit here pretty soon. That's all we got for today. Everyone have a good evening.